Traders Corner is brought to you by IG.
Welcome to Traders Corner. Joining me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's a point in the market where we're seeing quite a lot of volatility at the moment, and traders are actually starting to bemoan the amounts of volatility. So yeah, it's never good enough. It's either too calm or too volatile. But what are you seeing in the market? And I know you've got a chart of the top 40 up there, particularly in light of a trade that you've taken against the top 40.
Yes, that's right. I've just put this graph up on the screen really to show you our option structure that we've got running out to December, and then also to overlay or to show the chart of the top 40 and just to see where we're at. And by and large, what you can see there, this chart goes back to the beginning of 2014. And really and truly, the market, for the most part, has been very much range-bound between 41,000 up to about 47,500. And briefly in April of this year, we had a little spike out the top there. But other than that, by and large, we still remain very much within the sideways band. So for now, I reckon we're probably going up to 47,500, which is the top of that range. And then we'll see what happens when we get there. Probably expect a little bit of noise around that area. And then we'll take it from there. You know, typically the end of the year is normally a seasonally bullish time of the year. So are we going to see the market run hard from these levels, given that we have had quite a strong rally off the lows already? It's very difficult to say, so I'm not really sure. But in terms of where we're positioned, that option structure that you can see overlaid on the right-hand side of the graph there explains it quite nicely. We've got a put spread option structure. It works for us below 46,000. It makes its maximum profit between 41,000 and 43,000. And the market, it would only start to lose us money if the market traded below 38,000. Anything up until 50,000 on the top 40 future, we're limited to our premium pay away, which is not very much. So as it stands, I'm quite comfortable with this thing at the moment. It does give us the downside protection if the market were to go lower. And if we see buying opportunities in the market, then we do have the comfort of buying, knowing that we've got this protection in the background.
Okay, so that's sort of the background picture. What about a recent trade that you enacted for the portfolio, which was a pairs trade between RMB and First Rand? How's that working out? Yeah,
it's more or less flat for us as things stand right now. The reason we did this trade, it was a long First Rand, short RMB pairs trade. And you can see the two share price graphs overlaid on the screen over there. And the thinking here is that Rand Merchant Bank Holdings is it's a holding company that owns shares in First Rand. Pretty much that's really mostly what they own. And it therefore makes sense that the two share prices should track each other very closely. And you can see over there on that graph that they do typically track each other very, very closely. However, there are times where the ratio between the two stocks moves out of line a little bit. And when it moves out of line, then often you get a mean reversion, which you can then trade via a pairs trade. So if we look at it another way, this is the relative graph of First Rand divided by Rand Merchant Bank. And what you can see there, I mean, I know these numbers on the right are very, 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 very tiny. But for the most part, you know, this ratio, it tends to oscillate around about 0.78 is the value. If we think about First Rand divided by the price of Rand Merchant Bank recently, that's more or less where it was at a midpoint. Those white bands that are on the graph, they are called Bollinger Bands. The middle one is a 20-day moving average, and the outer two bands are essentially a 2 standard deviation move away from that 20-day moving average. And what's very clear is that each time this ratio has got to the bottom of those Bollinger Bands in the past, usually there's been a mean reversion trade where the ratio between the two stocks has actually moved back into the middle of that range, if not towards the other end of that range. So recently we've seen a major, major underperformance by First Rand relative to Rand Merchant Bank. And what this means is that First Rand is very undervalued relative to Rand Merchant Bank. So what we did was, once the price got to the bottom of this Bollinger Band over here, the ratio then was about 0.75 or thereabouts. We actually went long of First Rand at 49.75 and we went short of Rand Merchant Bank at 67 Rand. We did this in the same nominal value each way. We did 150,000 Rand each way. That meant that the ratio was 0.7425 at that stage. my stop loss was 0.72, which it was down here, but we did get sort of close-ish to that during the last week or so. But the ratio does seem to have moved up in the right direction for us now. And I'm looking for a move up, basically up here towards 0.78, which would be a mean reversion. So if we look at it another way, this table effectively spells out the mechanics of how we did this trade. On the left-hand side, you've got the first rand leg of the trade, and on the right-hand side, you've got the Rand Merchant Bank leg of the trade. We did 150,000 rand nominal each side, 150,000 nominal long of first rand, and 150,000 nominal short of Rand Merchant Bank. And you can see the prices of the two different stocks there. The ratio is 0.7425, as I mentioned. It meant that if our stop loss at 0.72 were to be hit, that would cost us 4,500 rand in terms of the risk that we've assumed. And if it goes up to our target, and we do see the mean reversion like I'm expecting here, then it means there's about 7,500 rand of potential profit to be made here. So right now, where do we stand? Well, when I did these slides, first rand is priced at 50 rand and 58 cents, so we're up 2,200 rand there on that leg of the trade. And Rand Merchant Bank, it was just under 68 rand when I did this trade, so we're down about 2,400 rand there. What's also interesting, though, with this trade is that both stocks have paid a dividend in the last week. They went ex-dividend on Monday. So there's the amounts of the dividends that you can see there. So the first rand leg of it, we received a dividend of 3,527 rand.
Yeah, big long of the stock.
Big long of the stock. Now, because we're short of Rand Merchant Bank, if you are short a CFD or you're short a stock, you have to pay over the dividend to your scrip lender. So in this case, we paid away 4,446 rand in dividends on the Rand Merchant Bank side of it. But as you can see, those two dividends more or less offset each other. We actually get a slight net income. But by and large, if we take all of this and bundle it all together, the trade is now down 142 rand.
Okay.
So it's not really doing anything for us. It's not losing us much money. It's not making us anything at this stage. But I'm still reasonably confident that this pair trade is looking as if we should see a mean reversion.
Okay, so you're hanging in there, not exiting that position. Okay, Garth, you've been quite active in the portfolio over the last couple of weeks, and this week you have put a long position on for the portfolio, and it's Zeder, and Zeder's a trade, well, now you're only going half a trade, I suppose, because you had a pairs trade between Zeder and Pioneer Foods not so long ago. Yes. So now you've ditched Pioneer and you're just going for Zeder.
Yes, that's right. Yeah, so this trade does kind of hark back to that pairs trade we did a few weeks back with Zeder and Pioneer Foods. And I'll explain why I'm going naked long of Zeder this time. But there's kind of a link back to that pairs trade as well, which we'll get into. The chart of Zeder is up on the screen at the moment. And what's really interesting just to look at here, purely from a technical standpoint, is these bands that I've put on in terms of the different support and resistance levels. Earlier this year, the stock was range bound between 7 rand and 8 rand. Then it found a new trading band of between 8 rand and 9 rand. Now it broke back down, and we now look as if we're back in the band of 7 rand to 8 rand once again. And some people might look at this and say, well, aren't we about to form the right shoulder of a potential head and shoulders here? And who knows, maybe time will tell. We'll see. The thing is, let's unpack it a little bit more. Zeder, as we know, is an investment holding company with assets in the food and food processing businesses. Its biggest asset by far and away is its stake in Pioneer Foods. The Pioneer Foods component of Zeder makes up about 72% of Zeder's market capitalization. And then the remaining 28% is made up of Cape Span and Carp Agri and Quantum Foods and a variety of other businesses. But being an investment company, typically it does trade at a discount to its sum of the parts valuation. But you've got to say to yourself, what is a reasonable discount for it to trade at? Now, what's notable, this diagram, and I again apologize that the numbers and the figures are quite small here, but this was taken straight off the Zeder website and basically copied and pasted onto these slides. That at the bottom right there is what I'm most interested in. This is the published sum of the parts valuation per Zeder and relative to the share price. So what it's saying to you today, the 6th of October, the sum of the parts valuation of Zeder is 10 rand 38, and the Zeder share price at time of taking the screenshot was 7 rand 73. So that puts it at this time round, it's around about a 25% discount to its net asset value. Last week, the discount got to as much as 33% from its sum of the parts valuation. Now, historically, this discount has really been around about 20%. So what I'm saying is that Zeder's trading at a fairly deep discount to its historical sum of the parts
yeah.
discount. All right, so that's one side of the equation. Looking at it another way, this is now a graph of Zeder relative to its sum of the parts valuation per share. So the top line over there, the green line, is the sum of the parts valuation of Zeder, and the black line is the actual share price as traded on the JSE. And what you can see is they've generally tracked each other relatively well, but look at what's happened recently. We've had this major disconnect between where we're seeing the share price trading at a very big discount to its sum of the parts valuation. And I know some people are saying it's because of the heavy management fee that Zeder pays over to the PSG group and so on. But I still think that the discount here is too wide as things stand, and that the market does probably need to correct itself, and we need to see that discount to the sum of the parts narrow somewhat.
Which is why you put the pairs trade on short Pioneer, long Zeder, because Pioneer has done so well, but Zeder doesn't seem to have tracked that.
Well, this is it, exactly, and this is the point I want to make. We did that pairs trade a few weeks back, probably about 2 months ago now, where we went short Pioneer Foods and long Zeder. In other words, looking to try and capitalize on a narrowing of that gap. The gap went wider and wider and wider until eventually it went past our stop loss, and we said, well, look, you've got to eventually draw a line in the sand somewhere, because the market can remain irrational for longer than you can remain solvent. And we didn't want to see the bad side of that hit us. So we decided to close that trade out. But I hark back to this, because the reality is we closed that trade out, but that pairs trade has been a very, very popular pairs trade to do in the market. So much so that scrip availability to borrow for Pioneer Foods is now very, very tight. And what I mean by that, if you go short, you actually need to borrow shares from a scrip lender and use those borrowed shares to then sell short. If there's no shares available to borrow, well, then you've got a problem. Then you can't go short. And if you are already heavily short and the price continues to move up and up and up, well, then the only thing you can eventually do is buy back that short. And that could result in a short squeeze. So the reason I bring up the Pioneer Foods chart here now is to look at what's happening here. Now, look back at May and June of this year and into July, we saw a consolidation and then a breakout to the upside. And your relative strength index, the RSI, gave you a clue that that breakout was coming. Now, we're seeing a very similar thing happen here. We've seen a consolidation over the last 2 months. And again, we've had a breakout on the relative strength index, which is preempting a breakout on the price itself. Now, what interests me here is, as I said, this pairs trade, short Pioneer Foods, long Zeder, is a very, very popular trade. It's a very crowded trade. When you have a trade that's so crowded like this, and particularly if we look at the fact that Pioneer Foods has been heavily shorted, we know that, but the price hasn't come down. So if the price hasn't come down when everybody's been shorting it, then what's going to happen? Well, surely it's going to go up. The only way it can be up, because all those shorts are going to have to cover at some point. So now the reason for me enacting a trade on Zeder...
Yeah, because, I mean, you could just say, why not just go long Pioneer?
Well, exactly. We could just go long Pioneer. I think the rationale is there to do it. But what I like about the Zeder situation is that I think if we see Pioneer Foods rallying, and there's a short squeeze in Pioneer Foods, well, that should drag Zeder up with it. But also, if we see the discount to some of the parts narrowing in Zeder, then you might find that a situation emerges where Zeder actually rallies even harder and at a faster pace than what Pioneer Foods will rally. And that's why I'm inclined to want to go through the Zeder route, go long of Zeder rather than go long of Pioneer Foods here.
Okay. So, Garth, take us through the trade then.
Yeah, all right. Well, we had a bullish engulfing candle late last week on Zeder, so that was my signal to go long off the 7 Rand level. We went long at 7 Rand 35 and it put a stop loss at 6 Rand 95. And I'm looking for a move up into this 8 Rand to 8 Rand 50 sort of region.
Okay.
If we take it through the mechanics quickly, as we usually do, buying it at 7 Rand 35, stop loss 6 Rand 95, that means the risk per share is 40 cents. I'm risking 1.5% of our capital, which is 5,175 Rand. That's what I'm willing to lose if this trade goes wrong. I take that 5,175 Rand and I divide it by the risk per share, and it gives me 12,937 shares. So I'm rounding that up to 13,000 CFDs. That's what I've bought for the portfolio this week. My target is 8 Rand 50 as an ambitious target. My risk to reward is 1 to 2.87, and my exposure, my total exposure on this is 95,000 Rand long.
Okay, well, this is going to be an interesting one to watch. And very quickly to wrap up with Garth, what does the portfolio look like?
All right, it's looking like this. We're up 40% for the year to date. There you can see the recent trades that we've done. The Zeder one is up about 5,000 Rand for us at the moment.
Okay, so Heading into the last course, and very, very quickly.
Yeah. All right, I'm running 2 final courses this year. Last courses of 2015 in Cape Town on the 7th of November and in Joburg on the 14th of November. Anybody that would like to attend either of these, please email me, garth@traderscorner.co.za, and I'll send you all the information.
Okay, great, Garth. Unfortunately, we have to leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.